Greetings, fellow investors. Today we're going to be taking a closer look at Adobe stock. Now, this is maybe the one time that I have to be specific when saying stock, because when I mean stock, I'm talking about the actual ownership or shares in the company Adobe Incorporated, not Adobe stock photos. Yep, now that we got that cleared up, I'm sure most of us have heard of Adobe before. They are a software company specializing in design, multimedia, and then of course the digital experiences. You may have heard of Adobe Photoshop, Adobe Acrobat PDF, Adobe eSign, Adobe Flash Player, or of course Adobe Stock Images. Adobe was founded all the way back in 1982, and they went public by 1986. The stock price has went up an amazing 217,000%. No, that is not a typo. If you somehow had the hindsight to invest in them back in the 80s, you would be a very, very rich person today. Another way to set yourself up for greatness is to hit that subscribe button and see all the great videos that I will continue to put out for you guys. So all I ask is that you guys show your support by tapping that like button, as it really does help me in the algorithm, which has been quite lacking recently. I don't think all the gains have dried up just yet for Adobe. Adobe continues to record record profits. Its third quarter profits were actually up 14%. They grew to $3.2 billion. Its subscriptions revenue grew 17% year over year. And that's what I really like about this company, is that in the past you just maybe had to pay a one-time fee to use Adobe's products when purchasing them. Now you have to actually pay a monthly fee, basically becoming a landlord of software products. Adobe has over a dozen media editing software services, plus access to the ever high in demand cloud storage. Its Creative Cloud software bundle has more than 20 of Adobe's high-end media editing apps, such as Photoshop, Illustrator, and much, much more. They reported a spike in demand thanks to the growth in digital media. There are jobs that may not have even existed less than 20 years ago. The 2020 election is a prime example of this. It's an example of why digital ads are needed as campaigns try to unload a fury of negative ads about their opponent down our throats. In 2019, Adobe actually bought back over $3 billion of its own stock, meaning that they thought the stock was potentially undervalued at the time. Advertising/marketing companies love using Adobe products. I can't see this sector function without their dependency on Adobe. Basically, every company needs some sort of marketing department. All these people on YouTube probably are using Adobe in some way. Those kids on TikTok, yeah, they're probably using Adobe products as well. Clickbait thumbnails, that's definitely Adobe. Editing Instagram pics, that's definitely Adobe as well. At my company, we utilize the Adobe eSign option, which stores high-ranking members of the team's signatures on important documents. Therefore, they don't need to physically be there to sign a physical copy of a contract. It's all electronic now. The C19 has proven that Adobe can flourish even in the toughest of times. And in the digital age that we live in today, consumers and business need Adobe projects all the time. Thus, they will have to continue to pay Adobe to use them. Adobe does now trade at a very lofty PE ratio of 60, and the market cap has ballooned to $230 billion, making it among the largest companies in the world. Now let's take a quick look at their impressive financials. When we look at their 5-year revenue chart here, we can see it's actually increased its revenues from $4.7 billion in 2015 to almost more than double that at $11.1 billion in 2019. Its EBITDA and net income have also continued to rise during the same time span. Even in the years before 2015, this company was just continuing to grow that top and bottom line year after year. These are all great trends that I want to see in a company when I'm thinking about investing in them. They've consistently shown that they can grow their top line. Out of its segments, digital media leads the way, followed by digital experience and publishing, which makes up a very small amount of total revenue. This is what makes up the digital media segment, including Photoshop. And this is what makes up the digital experience. And there's lastly the smallest segment, publishing. The company keeps raising its gross profits 20% year over year. You wonder how long that can be sustainable and how long they can continue to do that. Its gross margins are ridiculous, near 90%. Once they have the technology developed, it's not costing them much more to scale it to more customers, similar to Visa and MasterCard with their card processing fees. Its margins are also very high at 31%. Net margins take into account the trailing 12 months revenue by its trailing 12 months net income of $3.86 billion. That is superb performance by Adobe. Its balance sheet is also one that you can be really proud about, as they actually boast $4 billion in cash, ready for any emergencies that might happen or possible investment opportunities. The company also has less than $1 billion in long-term debt, which for a company this size is out of this world good. A current ratio of 1.44, comparing its current assets of $7.3 billion to its current liabilities of $5 billion, helps them a company like this isn't having any issues paying back any short-term obligation. ROE, or return on equity, will give us a gauge of how much profit the company is generating with the money we gave them. Usually anything over 20 is really good, but Adobe's latest quarter had them with a 35% return. Adobe just continues to acquire new users across the world and in many different segments. As long as they continue to retain their already existing members with their licenses and softwares, I can just see more and more green coming for Adobe. It doesn't seem like they are too affected by C-19. If anything, this has only helped them more and more. Their CEO, who has run the company since 2007, has done a fantastic job, taking the stock price from $47 to $478 in just 13 years, which is nothing short of amazing. He was the main driver pushing for Adobe to transition from a desktop software company to a cloud with its creative and digital solutions. He has a 96% approval rating based on almost 1,000 reviews of people who have worked for him. That's pretty high praise and sentiment based on Glassdoor. So this has been a really quick video here, and now I want to hear what you guys have to say about Adobe, if it's a buy for you, or if it's too overvalued, or maybe perhaps it's just not even as great of a company as I seem to be making it out to be. So let me know in the comments if you agree with me, disagree with me, and let's just keep making that bread. If we only actually have actual bread, maybe we can use Photoshop to make it look like money.